All right, so we're going to be doing just another trade breakdown, case study, whatever you want to call it, about PRZO. This was hands down the strongest small cap over the past couple of days. Started off on Friday near $1 per share, even lower in pre-market. And then yesterday ending at about $3.50 per share. That's over a 350% gain. I did get a big piece of it. I had a pretty decent profit, which I'll post a screenshot of my TraderView executions here. I did trade it a few times on Friday. I had one decent trade in the morning at market open. Then I stopped out of it and then I got back into it for that overnight swing, which really was the big winner. So I'm just going to kind of break down my theories, my thought processes through this trade so that hopefully you can get some information, some value out of this. And I'm not going to spend too much time on Friday because honestly, after looking back at it, I think I traded it pretty poorly on Friday. There was even a better entry. Like as far as my ideal setup, there was like the best entry was Friday in after hours, which because I was already in, didn't really matter. But yeah, we're just going to kind of break this down. Very strong move. These are my favorite moves, these multi-day movers. So just going to kind of look through my trades with you guys and break them down. So let's just jump right into it. And let's first start off with breaking down just what this stock is and why it had such a powerful move. All right. So if I go to one of the best websites for small cap day traders, this is Dilution Tracker. So this is a very valuable tool and you can get lots of access for free. If you want to sign up for them, I recommend to do so. I have a link down below. I'm not sponsored, but I really like this. I use it every single day. It's very valuable because as you know, lots of small cap companies are just trash, right? They raise money by diluting shareholders. So lots of companies will have filings, they'll have offerings that just hammer down the price. So one of the first things I always do whenever I look at stocks in pre-market is I look at the dilution tracker just to see what the company's about. Are they a dilutive POS or are they kind of more structured in their financing? So if we look at PRZO, pull it up, you can see, not a lot of history of dilution. They just IPO'd a few months ago and their cash position is really strong. They have, in terms of how you equate it, 180 months of cash left. So the risk of an offering, right? They're not hurting for cash right now, pretty low. And then also if you look at, you can see down here, completed offerings is 0. They've done none and they have no dilution. So just off the bat, right? If I see a stock first green day with news and it has no dilution, that's going to be it's not an immediate trade. For some people it is, for me it's not, but it's definitely going to be high up on my watch list for like, hey, I want to find the trade in this one as fast as I can. So then if we just kind of dive into it, once again, I did recaps and webinars every single day as this went through. If you want to check out TradeBuddy, link them down below, but we'll break it down as best as I can in the time that we have today. So first off, let me get where's my scans? Here it is. Okay, so let's get PRZO. And if we look at the news, let it load up, you can see, so this started off on Friday on the 6th, and they released news that the Australian regulator approved the first commercial drone flights in populated areas and near people using the PRZO safety system. So pretty strong news. I mean, I don't know how this is for valuation wise, but just getting approval to do something like drone flights, it's probably pretty pivotal for this company. So that's why it had so much hype in pre-market. And as you can see, the market loved it. News came out, it was at 66 cents. Spiked all the way up into market open, hit a high of near $1.42. So this was early on their watch list. And in the beginning, I mean, I am very much more of like a bigger picture trend trader. So in the beginning, I mean, I definitely wanted to get a piece of this. I'll be honest, like I said, I think I traded this too early, but this is overall just kind of one big spike. This is going to be a very common theme that you'll hear me say time and time again, where in general, if you look at the chart, ideally a 5-minute chart, let me get my fancy whiteboard here. In general, the best trends you'll see is when you can zoom out of a chart and then you can see, okay, there was a clear buying wave right? So there was strength, then there was a pullback. And here there still is no trade, right? Because you don't know if a trend is made yet. A trend is made when it gets strength again and breaks out, right? So then you can go in, you can use this previous resistance area, and you can buy that as new support, risk the break of this line here and go for the bounce. That's like the most simplistic way to break down my trading. And just for the sake of this video, like I said, I traded it a bit too early. You can see that the best, most obvious point where that actually happened, that nice trend formation and breakout, didn't happen until after hours on Friday, where we had this nice previous resistance was tested as new support near $1.30. And that was hands down the best entry on PRZO. So I'm going to break down my trades in Friday, but like I said, I think the best and simplest trade wasn't until after hours. Makes the most sense chart-wise and my strategy-wise. So obviously in pre-market, I was looking at this trend and I said, yeah, you know what? There could be some continuation if it like breaks out over $1.08, pulls back and retests. Now, one thing I do very often whenever I'm planning my trades is I want to go to the daily chart to mark off where resistance can be. So I just go to the historical 1-year candles and I zoom in here, right? And you just go in and you mark off where resistance is. And we can see here, if you go and you just mark off the tops of the lines, there is a resistance at 142. You can see this is from the historical chart. This top happened last month in September. And on that same day, there was a big volume on that day. So I like to mark off where that VWAP is too, just in case. That's at $1.71. And sure enough, you can see, well, 142, if you have a good memory for like the past 10 seconds, that is where the first spike out of market open actually topped out. Like legit, exactly, it topped out at 142. Like to the T, you can see up there on the top left. 142, it topped out. So my first trade, I got into it at like, low 110s into this candle. And I took profits into this first spike. And still, because it didn't really feel like an actual trend was made, I was kind of just whatever. And you can see that there's also this kind of more significant line a bit at like 98 cents. So I made a plan to, initially I got long at market open. I took partial profits because I thought it could go higher, but you never know. And then after it broke down through 109, I made a secondary plan just to kind of make a new trade based off of 98 cents with a max loss on the break below 85. And then like this isn't really averaging down. It's not doubling down because my first trade failed, because just with my philosophy, if my first trade was correct, it should have held 109 on the retest. But because it didn't do that, I made a plan to sell that into a bounce. So, you'll see it on my trader view here. Let me just get it up real quick. Here's the trade executions, right? So, like I said, I got long just into that pullback at market open, like near 114. I took profits into that 142 line. I always undercut just because I don't want to go for the exact point. And then you can see I added into it as it was holding $1. And then like the trade I took at market open, I sold into the rejections, right? I exited that trade because that trade failed. So yes, I did average down, but I averaged down in the sense of I'm making a new trade to exit my last trade. So I exited that initial trade from 115 into the test of 110s. And then with the new trade, my whole plan was as long as it holds 98 cents, we could see some short squeeze. So I held through this, kept on holding, and then you can see it broke down here. So because it broke down through the line, I said, yeah, this is not really working out. And I sold my trade into break even. That was this right here. And then it kind of popped up and got some more strength, right? It kind of spiked back up. It was still showing that overall support at $1. And then I took a second trade. So this was the one I swung overnight, right? So this was the second trade right here. And you can see I got back into it just as it was holding $1. So yeah, this was a really big profit. It's a lot more based on like intuition or whatever. just kind of seeing that, it's holding a key support. The whole idea behind this trade was that a lot of short sellers were just getting kind of bent over, right? Just simply put, this stock has no dilution. It's first screen day with news. There was lots of shorts who were trying to hammer this thing down, hoping for a bigger sell-off. And it wasn't breaking down, right? Like if you're a short seller and you're shorting it at $1.20, $1.10, you're not going to take profits and sell or, cover your position at $1. You want to get that all day fade, right? You want to get that big profit. So most shorts are going to be holding this for the bigger move down. And as it gets closer to afternoon and it keeps on holding support, that's why you see lots of these stocks that do hold support. They tend to have end of day squeezes because shorts are covering. They don't want to hold a strong stock overnight. Number one, they have to pay interest fees overnight. So if it's not going in their favor, they just don't want to hold it. That's why after this spiked back up and then it held support one last time, I jumped into it and that paid off big time. But like I said, for all intents and purposes, I would have been better off just not trading this at all and waiting for it to retest this level right here. I mean, you can see it here, right? There was a very nice retest of $1.31, clear previous resistance as new support. And this really follows along with this picture, right? This is, this, you can say this is $1.30, right? This was that $1.31 level. This is the hold of $1. So even though we know $1 is a support line, in terms of a trend, it's not really a real trend yet. The better trade is waiting for the breakout and then buying that retest, which happened right there in after hours. And that did lead to a very nice gap up. So that's pretty much that. So then the next morning on day 2, we spiked up, locked in some more partial profits into this 220s area. Once again, one of the best things I love to do on day trades is just look to the daily chart for levels, right? As you can see, I have some levels marked off here. There was some prior resistance. You can see right here near 210. There's another level near 220. And then also you can see once again, a big daily volume on this day on 807. So the view up right there is at 230s. And if you bring that into the intraday, that was where there was a lot of potential resistance. So like I said, locked in some partials. So now going back into the idea of like trapping shorts, right? Day 2 is a day where a lot of short sellers have strategies of just shorting day 2 moves because historically they are more likely to sell off than not. But PRZO was a different case because once again, it has no dilution and it already trapped so many shorts on day 1. So for me, because I already locked in partial profits and guaranteed some profits into the 220s, and I knew that it was resistance, I kind of expected that, hey, yeah, this is probably going to pull back into market open. But as long as it holds this like higher low near $1.90, then it's fine. And we have some short sellers in TradeBuddy who were shorting this on day 2, right, into 220s. And I'll just post a screenshot. I just said, okay, PRZO is suckering in new shorts, which kind of was a joke, but it wasn't, because for a stock to continue, it needs to kind of get new fuel, right? If you have a fire, right, and the fire is roaring, obviously, if you want it to keep going, it needs new fuel, either new oxygen or new fuel itself to keep itself going. So I said that, what tends to happen for stocks to continue on day 2 is that they need to make short sellers and sellers believe that it's weak with some market open weakness. But as long as the big picture is still bullish, then it's just going to trap them and squeeze. Sure enough, you can see PRZO did pull back, held that support, and then it broke out over new highs. So at this point, I was super bullish on PRZO. And I said, so here's where I kind of made a mistake, which you'll get in a few minutes. Because I was so focused on the intraday, I was like, okay, as long as it holds 225, anyone that shorted this morning is now underwater. So as long as it holds 225, it's totally bullish. Tried holding it for a bit, but then you can see it sold back off, broke on back down. So this, if you watch my other videos, this is like a common theme for me to see weakness. It's like a head and shoulders failed breakout. So my plan, my strategy usually for exiting is seeing this stop holding previous resistance as new support and then using that left shoulder, seeing that failed breakout, and then selling into that right shoulder. And as you can see from my chart executions, that's exactly what I did. I sold because I saw that as weakness. I said, that's the plan I'm going to follow. I'm going to sell into that 215s, 220s area as resistance, and I exited the trade. And so this is kind of a point of contention, or like a hard psychological thing for a lot of traders to kind of swallow, I guess, is that sometimes your plan is going to have you do something where the market might choose something else, right? And that's okay. So like in this case, and for many cases for me, sometimes I sell a stock and it's because I was following my plan, following my strategy, and then the stock happens to go higher. That's not an issue, right? Because I followed my plan in the end. So instead of being like upset, like, oh man, I could have made money if I just ignored my plan and held. One thing I tell myself all the time is that if a stock is truly bullish and it happens to break out after I sell, great. I will likely get a chance to re-enter it. Not by chasing the strength, not by chasing and predicting it's going to break out, but letting it break out. And then once again, trying to find that idea of using previous resistance as new support, right? That's the key, right? So like I said, one mistake I think I made here, if I did make one, is that one of my many rules is that when a stock is on day 2, I need to treat it as a multi-day mover. So I need to use the hourly chart. But here I chose to use the 5-minute chart because I just thought it was more important. So if you look at the hourly chart here on Thinkorswim, right? This is still very much an uptrend, right? It hasn't failed to hold previous resistance as new support ever since day 1. It's been holding it very well. And then even on that morning, it was just holding resistance, but it didn't really fail to break down. So once it squeezed up, I said to myself and my chat, like, okay, I'm going to wait for this hourly candle to close. And if it does close as a breakout, then I'll just plan a new trade using the hourly chart, previous resistance as new support. I mean, you can see here, right? If you look at this chart, we have previous resistance at 215. Next support lower for max loss is 193. And then after it spiked up, it made new resistance at 270. So just off that, you can make a plan, right? Long 215, max loss 193, first target 270. That is a profitable risk reward. And not by chasing the spike, but by letting the spike happen and waiting for the pullback. Because as you can see, right, this isn't hindsight. This is all using historical past price action. And it did, in fact, pull back, and it perfectly bounced off at 215, right? This is like big stuff right here, right? This was a perfect entry. And that's, in fact, what I did. So I did have some orders a bit higher, right? I first got in at like 231, locked in some partials at 260s, but then I got the rest of my size back in at 220s, locked in some more partials at 260, and then I swung it overnight. So now that I'm basing it off of the hourly chart, right, I have to just focus on the hourly chart, meaning that you have to wait for the hourly candles to close. It takes a lot more patience, but it lets you get bigger moves. So as long as 216 held its support, this was fine to swing. Thankfully, into the close yesterday, it did squeeze up, broke out, right? I had my next resistance point at like 360 from the historical chart. So I didn't lock in any partials at 345 because there was no reason to. But yesterday and after hours, my main thing was, okay, I will hold this and consider this bullish as long as it holds 270 as support. As long as that holds, it is totally fine. But then you can see this morning, it in fact broke down, right? It no longer held previous resistance as new support. So just like yesterday morning on the 5-minute chart, we're seeing that same pattern now on the hourly chart where I have to, based on my plan and my process, I have to respect that this is now weak. This is a head and shoulders. And I need to overall do my best to sell into this previous resistance as new resistance. I did get some sells into it in pre-market, but ultimately the rest of my shares, I did have to sell into break even into the 220s. But overall now I think this is very much weak. This is no longer bullish. And there is really no reason for any long to think of this as a good trade. If anything, this is now a short because you can see now we're holding previous support as new resistance. That is a clear sign of a downtrend, right? The only longs who are trading this now are ones who missed the front side move. Simple as that. So a lot of different trades on this. But as I said many times through this video, right? The best trades are the ones that are just trends. The best thing you can do as a small cap trader, this is what I learned too late, to be honest, but eventually I did learn it. Stop using the 1 minute chart. You're not going to find actual trends on it, right? If you want to get big moves like dollars per share, you need to focus on bigger trends. Best thing you can do is try to find something that looks like this, right? Where it looks like you have a spike, you have the pullback, and then let it show you the trend by being bullish. And don't buy the breakout. Wait for that next pullback. It takes time, but the beauty of this is that you don't have to guess what stock you're going to trade. Like by the time you get your entry, it should be very obvious that that's the stock you want to trade. I have an example, right? Right now we have a stock TPST. It just spiked up today because they dropped some news. They announced news that they're announcing news tomorrow, right? Some buy the rumor, sell the news BS. Very strong move, right? From 20 cents to $1 per share. Now, it's not my strategy to buy news breakouts. If you do that, that's totally fine. But for me, right? Cool move, but I have no trade here. The only time that I can make a trade is waiting for it to say tomorrow. If it breaks out over $1.08, then I can plan to use $1.08 as new support. But for now, I just watch this. I have no edge, so I'm not going to trade it. So that makes trading for me a lot simpler, makes finding trades a lot more straightforward because it should look like a trend before I even consider trading it. Less over trading, less predicting, less scalping, less chasing. And it makes things a lot more straightforward. So hopefully this wasn't too quick of a video. I know that there was a lot of concepts to talk about on PRZO. Like I said, I did about 4 hours of content on these 3 days in TradeBuddy. So if you want to join, we have a free 14-day trial. You get the full course, you get the webinars, you get the chat room, you get everything. If you don't like it, cancel, no hassle at all. I also have some free courses, just need your email address to send it to you to kind of break down the idea of data-backed consistency and how to actually get profitable with your trading. Links are down below. If you don't want any of that, just hit the like button. If you like this video, it helps out with the YouTube algo. And yeah, that's pretty much it. Hopefully you enjoyed, and see ya.